Okay, as promised, I'm picking up on page 454 of the Reference Guide to Regulatory Compliance. This is within subsection 3, Deposits, EFT, Electronic Funds Transfers Act. And I am in the middle of discussing the requirements under EFTA, and I ended with periodic statements. The timing of periodic statements must be mailed for each monthly cycle in which an EFT occurs, but at least quarterly if no EFT occurs. The content of the periodic statements for an EFT that has occurred, banks must disclose the amount of the transfer, the date the transfer was debited or credited to the account, the type of the transfer, the type of account, and the name of the third party to which funds were transferred. In addition, for each EFT initiated at an electronic terminal, disclose the following: terminal location, including the city and state, unless all terminals are located in the same city and state, and B, one of the following: the street address, a generally accepted name for a location including city and state or foreign country, or the name of the business where the ATM is located including city and state or foreign country. Within content of the periodic statements, the third item is to disclose the account number for which the statement is issued, disclose the amount of any fees or charges assessed for EFTs or for account maintenance. Fifth, disclose the account balances at the beginning and close of the statement period. And sixth, the address and telephone number for inquiries or notice of errors. This may be provided in the notice of error resolution on the periodic statement instead. And seventh, a telephone number if the bank provides one to ascertain whether a pre-authorized transfer has occurred. Exemptions. A periodic statement is not required for accounts where the only EFT allowed is a pre-authorized transfer to an account. If the account is a passbook account, the bank updates the passbook on presentation. If not, the bank sends a periodic statement at least quarterly. Intra-institutional transfers are also exempt as long as the transfer is documented on the statement of one of the accounts. Change in terms notice. This is another requirement of EFTA. Banks must provide in writing to consumers at least 21 days prior to the effective date of any change in a term or condition disclosed in the initial disclosure statement if the change results in increased fees, increased liability for the customer, fewer types of available EFTs, or any stricter limitations on the frequency or dollar amount of the EFTs. Prior notice is not required if the change must be made immediately to maintain or restore security to the EFT system or an account, but if change is permanent, must notify within 30 days or with the next regularly scheduled periodic statement unless notice would jeopardize the security of the EFT system or account. This has been particularly interesting when banks incur liabilities from skimming or use of compromised card numbers from, say, particular geographies, and change in terms notice will go out as soon as reasonably practicable that a country, say for example Spain, or say for example Mexico, is put on a special security to prevent transactions from those countries from being presented to the account. Generally, this is temporary and doesn't require change in terms notice, but if the change is permanent, as we said here, the customer must be notified within 30 days or within the next regularly scheduled periodic statement of permanent change. For error resolution notice timing, this is going to happen at least once a year, or alternatively may be included with each periodic statement. And the content is that the error resolution notice must be substantially the same as the form prescribed in the regulation. Unauthorized transfers is another requirement under EFTA for the prerequisites for consumer liability. A, if an access device was used, it must have an accepted access device. And B, institution must have provided a means of identifying the consumer to whom the device was issued, for example, by electronic means, a PIN, a photograph, or a fingerprint. And C, the institution must have provided the following in writing to the consumer, which is I-1, a summary of consumer's liability for unauthorized transfers, Roman numeral 2, telephone number and address of person or office to be notified in the case of an unauthorized transfer, and Roman numeral 3, institution's business days. The second item, limitations on liability under unauthorized transfers. You have a $50 limit if the consumer notifies the institution within 2 business days of discovery of loss or theft of an access device, not including the day the consumer learns of the loss or theft. B, if the consumer does not notify the institution within 2 business days of the discovery of loss or theft of the access device, the lesser $500, or the sum of the amount of unauthorized transfers made within the first 2 days, business days that is, up to $50, and the amount of unauthorized transfers made after 2 business days and before notice to institution. The institution must establish that the loss over $50 would not have occurred if the consumer had notified the institution within 2 business days to raise liability to the $500 level. The third point under limitations on liability is that the first 2 tiers of liability are not applicable unless an accepted access device was used. And D, full liability up to the amount of the unauthorized transfer may be imposed if the consumer does not notify the institution within 60 days of the institution's transmission of the statement on which the first unauthorized transfer appears. To raise a liability limit, the institution must first establish that the unauthorized transfer would not have occurred if the consumer had notified the institution within the 60 days. The unlimited liability applies only to the transactions that occur after the 60-day time period. Extenuating circumstances, such as hospital confinements, travel, and so forth, may extend the liability time periods. If state law has more generous limitations of liability for the consumer, the state laws will govern. Error resolution. This is part C under the requirements of EFTA. 1. An error includes any of the following, which is 1. An unauthorized EFT, an incorrect EFT to or from a consumer's account. B, C, the omission of a periodic statement of an EFT that should have been included. D, a computational or bookkeeping error relating to an EFT. E, the receipt of an incorrect amount of money at an electronic terminal. F, an EFT not properly identified on receipts or statements. And G, a consumer's request for documentation required to be given on receipts or statements for the clarification of information. Does not include routine inquiries about account balances. 2, an error is not one of the following. It is not A, the reversal of a direct deposit made in error if not considered an unauthorized EFT if the deposit was made to the wrong customer's account, a duplicate was made to the customer's account, or a credit was made to the wrong account. B, a routine inquiry about an account balance. C, a request for duplicate copies of statements. D, a request for information for tax or record-keeping purposes. Or E, the failure to receive a receipt from an electronic terminal when the transaction amount is $15 or less. Consumer responsibilities. A consumer must notify the bank either orally or in writing of error within 60 days of the institution's transmission of the statement or other documentation on which the error first appears, or of receiving additional information or clarification provided pursuant to the consumer's request. Consumer's notification should include the following items. This is I, the consumer's name and account number, or information that allows the institution to identify the consumer's name or account number. 2, the consumer's belief and reasons for the belief that an error exists, and if possible, the type, date, and amount of the error. This information does not have to be given if the consumer is simply requesting further information or clarification. The last of the consumer's responsibilities is if the consumer gives an oral notice of error, the institution may request confirmation in writing within 10 business days of the oral notice. The 4th, financial institution responsibilities under error resolution. is A, the 10-day requirement. Promptly within 10 business days, the institution must investigate the alleged error and determine whether an error has occurred. There's a 45-day requirement if necessary, that it takes 45 days to investigate the error. Then it must provisionally credit the consumer's account within 10 business days of receiving the notice of error, and may withhold $50 if the institution has a reasonable belief that there has been an unauthorized transfer. And never heard that. And 2, gives the consumer full use of the funds during the investigation, notifies the consumer within 2 business days of the provisional crediting that the account has been provisionally credited and the date and the amount of the crediting. The extension of time limits. Another financial institution responsibility under error resolution. For special investigation time limits, including those for new accounts, an institution has 20 business days to complete its initial investigation of an error notice, or 90 days if the funds in question are provisionally credited to an account and the consumer is notified. If the alleged error occurs within 30 days after the first deposit to the account was made. And an extension of time limits, part 3, is when an institution has 90 days to investigate errors if the provisional credit was given within 10 business days, and if the alleged error relates to a transfer that did not occur within a state or a point-of-sale debit card transaction. D, the institution determines that no error has occurred or that an error occurred in a manner or amount differently than the alleged error. It, 1, must notify the customer in writing of the date and amount of the debit to account and the fact that the institution will continue to honor checks and pre-authorized transfers payable to third parties for 5 business days. 2, the institution must pay only items that the institution would have paid if the provisionally credited funds had not been debited. And 3, must promptly provide on request copies of documentation on which institution relied on to determine that no error occurred. E, under financial institution responsibilities under or for error resolutions, the institution need not provisionally credit the consumer's account if it requires, but does not receive written confirmation of oral notice of error, or if the error involves an account subject to the margin requirements of Reg E. The extent of the investigation to be performed by the financial institution. I, if error is a request for information or clarification, the institution need only transmit the requested information or documentation. Roman numeral 2. Except in cases where the service providing institution and account holding institution are not the same, the institution only has to review its own records to investigate the account and advise the consumer within the specified time period. And lastly, Roman numeral 3, an institution does not have to reinvestigate if it makes the final correction to a consumer's account in the manner or amount alleged by the consumer to be in error. Inadequate investigations. The OCC has determined that a national bank may not assume that simply because a customer's PIN or ATM card was used in a transaction, the transaction was authorized. Banks are required to take reasonable steps to determine whether a transaction was authorized. Such steps might include a review of documentation or written signed statements provided by the consumer, historical information on the customer's pattern of use, such as the time, location, types of transactions, and so on, location of the transaction in relation to the customer's home, place of business, or normal shopping locations. 4th, customer's location at the time of the transaction. 5th, problems reported by other customers regarding the access device or ATM. 6, signature information on point-of-sale transactions. 7, police reports, or 8, film from security cameras if applicable. Available, I should say. H, under the institution's required action for error resolution, you have error correction. The financial institution must correct within 1 business day after determination, and where applicable, credit the account with interest and or refund fees for charges imposed, and orally report or mail or deliver a written notice of correction within 3 business days after completing its investigation. If the consumer withdraws a notice of error, the institution has no further responsibilities, and the institution has no further responsibilities if the consumer continues to reassert error after institution has fully complied with the error resolution requirements. Next section, issuance of access devices, will be discussed in part 3.